Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com looks at the major markets. He tells us while the Dow and S&P have been treading water, the Nasdaq 100 is teasing all-time highs. He'll explain who's behind that. InsideTrackTrading.com CEO Eric Hadik gives us perspective on the cycles that drive the stock markets and disease outbreaks. Sunspot activity apparently plays a key role. Do astrology and investing in the markets work together? We'll find out as we chat with CrawfordPerspectives.com founder Arch Crawford, who uses a combination of astrology and market fundamentals to keep near the top of the Timer's Digest Best 100. Plus, at the end of the show, we'll have a company showcase update from American Manganese CEO Larry Reaugh. We'll talk to Ross Clark right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at Charts by Ross. Welcome back to the show, Ross.
Good to be with you, Jim.
Ross, any special offers for our listeners?
Well, this is the end of our stretch. We were doing half price on annual subscriptions, so that's to the technical analysis that I do, together with Bob Hoy's editorials and research that he does. So it's half price through this weekend for anybody signing up, and it's a pretty good deal, and we've got a number of people who have taken up the offer.
And, of course, Ross, we live in very interesting times. I think you should be on top of things.
Yeah. So that's at chartsandmarkets.com, and right on the front page there is the link for the subscription.
The Nasdaq 100, was it a good week for that particular market?
This is the index that really is leading right now. You know, if you take a look at the Dow or the S&P in particular, if you take off the top cream of your movement there, the market in the last couple of weeks has really just been grinding higher or just treading water. But you get over to the Nasdaq 100, in the top half dozen stocks there. You know, you got Microsoft, Apple, Amazon, down to Facebook, etc. You got over $6 trillion worth of market capitalization. Each, I think all but one of them are trading now within 6% of the highs, not of this year, of all-time highs. So the recovery coming back has really been selective. It's in that group. You've also got it in healthcare and in pharmacare, as you would expect, because clearly with all that's going on here with the COVID-19, you're going to see that action. The other area has been precious metals, which have actually been outperforming the bullion by a big extent. You take a look at the GDX, or you take a look at the SIL, so both of those being the miners, they're just having a great run here. Probably getting ahead of themselves, and we'll be taking a pretty close look at that. We've done some work as far as the gold-silver ratio back in March. Bob and I put out a few pieces there showing just how the gold-silver ratio was at extremes we hadn't seen in a long, long time, and it was part of identifying that interim low for the gold market. And since then, the other parts to the equation when it comes to the metals fits in with the action we've seen in the crude oil market. Typically when you've got a bad oil market, and it will tend to bottom out within a few weeks of a bottom in the gold market. So that washout that we had in gold from, 1700-ish down into the mid-1400s into the middle of March, we put that low in, and about 4.5 weeks later, we had the crude oil market have that devastating move down into the negative numbers and then bounce back. And when we look back historically, there's maybe a dozen examples where we've seen this good spike low in the gold market, followed by an interim low, an important low in the oil, and then the two of them tend to bounce well initially. However, that rally will end up finding a cap as far as the gold price is concerned. And it will be generally sort of in a 6-week window that either around the same low that we saw in the oil market. So it can be a few weeks earlier or up to maybe 4 weeks after. So we're in a window here where we're going to be looking for an important cap on the gold price, an important overhead resistance. Right now it's around the high 1700s. It could poke a little bit higher, but as we move through probably the next month, we're going to see that this area for gold becomes a pretty heavy resistance point and see a bit of a correction. Don't expect to see anything really blow out on the upside and accelerate until we get down the road, maybe 3 or 4 months from now. It might take quite a bit beyond that, but I think sort of the high 1700s to maybe 1820 for gold is about the best that we'd be looking for as we head towards the summer.
Ross, thank you so much for chatting with us.
Always good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can also find him on Twitter at chartsbyross. Coming up, Eric Hadik next on This Week in Money.
Always consult your investment professional before making any investment decision.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Eric Hadik, CEO and President of InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, how big of an impact do solar cycles have on the markets?
I think that when you look at it from a broad perspective, I think with a lot of those type of influences and factors, you can't be looking at day to day or week to week, because there's so many other factors that are usually exerting a greater influence, that even if solar type factors did have an influence, it would be muted by a lot of the more stronger influences on any given day. But I continue to contend that it does have an impact on a multi-year basis, and even as I try to stress to my readers, a lot of these things, it's hard to distinguish between coincidence and causality. And so you have this very consistent 11.2 year cycle of sunspots, the sunspot peaks and the sunspot troughs or lows, and over each of those solar cycles it averages out to about 11.2 years, so roughly an 11-year cycle. And at the same time, you have a very consistent 11-year cycle. I did this extensive report last March of 2019, and reminded my readers that we were coming up on the next phase of this 11-year cycle, that it should take hold at the very end of 2019 and flow through to the middle of 2020, and I labeled it two things. One was the 11-year cycle of global shaping events, and I traced that back to the mid-1800s and on every 11 years, and I'll go into that in a second. But then the other thing that I showed is at the same time it was an 11-year cycle of stock panics, where you saw at least a couple months of panic selling in the stock market. And so when I started discussing that last year, my focus was on the beginning of 2020 because there were many monthly and weekly cycles already arguing for a peak in January of 2020. But if you look at these global shaping events, yes, I definitely had a U.S.-centric view, but also spreading out from there, and you go back to even the Civil War. So 1862-63 was the particular years of this cycle. And the end of the Civil War and assassination of Lincoln, and then 1873-74 you had a panic and a coinage act that ended up impacting monetarily and economically the U.S. for decades to come. 11 years later, you had a depression in 1882 to 1885, and the panic of 1884, and it flowed through. 1906-07 was the panic of 07. 1917-18, 11 years later, was World War I, Bolshevik Revolution, and so things that were, like I said, global shaping. 11 years later, 1929 to 30, stock crash in the beginning of the Great Depression. And 1941-42, U.S. entry into World War II, which was also the culmination of the Great Depression. And it continued to flow. The culmination of the Korean War came 11 years after that. And then 11 years after that was the assassination of JFK, the Gulf of Tonkin, which really escalated and almost solidified our involvement in Vietnam for the ensuing decade. And at the end of that decade, 74, 75, 11 years later, you had the culmination of Vietnam. You had Watergate, Nixon, stock crash. 11 years later, 1986, 87, a big move in interest rates that impacted many of the markets, and then the stock market crash. 1997-98, you had the Asian financial crisis and then the ruble crisis, both of which caused abrupt stock panics for a couple of months. 11 years after that was 2008, 2009. We all remember that, the financial meltdown. And then 2019, 2020 was the next phase in that 11-year cycle of stock panics and 11-year cycle of global shaping events. At the same time, I discussed the coinciding solar cycle, and at the time, in March of 2019, when I was starting to really focus on this, the consensus among scientists, astronomers, was that the end of 2019 would be the trough of solar cycle 24 and the entry into solar cycle 25. And sure enough, that the first evidence of that was a solar storm in December of 2019. And for those that aren't familiar with it, one of the ways, or really the primary way of distinguishing which solar cycle that solar storm is from has to do with its polarity, because during each 11-year cycle, the sunspots, they shift polarity. So it would be the equivalent of, northern skewed sunspots or magnetivity during one 11-year cycle, and then southern during the next. I'm not an astronomist or scientist, so I don't know the exact classification they use when they're talking about the sun, but it's the polarity of these sunspots that allows them to determine whether it's from the preceding solar cycle or the new one that's coming. So December 19 just kind of reaffirmed that solar cycle was shifting, and these stock panics and these global shaping events that I've discussed often coincide with that shift in the solar cycle, and the trough is just as momentous or consequential of an impact on Earth and humans as the peaks are, but you hear more about the peaks and the big solar storms, like even going back to the 1850s, I believe it was, and the great solar storm then. So it's always, you hear more about the real strong impacts of the solar storm, but it's also when there's very little solar activity that it has a just as sizable of an impact on human psychological and even physical well-being.
Eric, is there also cycles like that affect disease around the planet?
Well, I would contend that there is, and even when I mention the impact on humans physically, and again, I would caution that I observe coincidence. I cannot intelligently argue if there's causality or not. I'm doing the analysis and noticing these things and seeing a strong correlation or coincidence between two events, but it doesn't necessarily mean that one causes the other or vice versa. It could also be that there's an even greater influence that's causing both of them. But I have documented, going back to 2006, I wrote a series of articles, and in this case it was a very consistent 10-year cycle in disease outbreaks, particularly viral and influenza outbreaks, that I traced back for 150 years. But often the real impact of that did coincide with the low and shift in the solar cycle. And when I wrote the first series of articles in 2006, I was discussing this 10-year, decennial, or decadal cycle that was forecasting an outbreak in 2009, 2010, and that was right when we had swine flu, H1N1, take hold of the globe and create some panic. And so after getting through that, in 2014, when we had the Ebola outbreak, I had a lot of readers asking me, hey, you talked about these disease cycles before, and how does this fit into it? Weren't you saying that the next phase should be more like 2019? And so I did a series of updates on that and some more forward-looking, and again described this very consistent 10-year cycle, especially in flu and viral outbreaks, going all the way back to Spanish flu at the end of that decade, and even prior to that, in 1889, 1890, there was a killer influenza that migrated from China to the U.S., and then as you move forward throughout the last century, again at the end of the decade, you saw the Hong Kong flu in the late 50s, the Asian flu in the late 60s, and there was this consistent, approximately 10-year cycle. And so in 2014, when I was doing these articles, and these reports are posted on our website. I'm happy to send copies of them to any of your listeners that want to see them. It's some of this is older analysis now, but it's certainly very pertinent now that it's coming to fruition, or has come to fruition. But so in these 2014 reports, I described how 2019 was the next phase of this 10-year cycle, and when we should see another significant outbreak. But there was an intriguing overlapping cycle that was also pointing to 2019-2020, and it was a 17-year cycle that I've described in my work for 20 years now, but it too actually is related to the Earth and the Sun. There's some very interesting, some of it way above my head, analysis and research that's been done over the last 15, 20 years that talk about the magnetic relationship between the Earth and the Sun, referred to as the to and away relationship in magnetivity between them that oscillates on a 17-year cycle. And in the past, I've shown how there's a very consistent 17-year cycle of stock market, and an overriding 34-year cycle of stock market crashes. So when you get things like this lining up, often they're kind of not overlapped, but spaced between one another. So it's those times when you get them coming at the same time that you really have to stand up and take notice, because it's that synergy that has such a powerful impact. But again, if you go back to the Spanish flu, and so 1918, 1920, and you start tracing this 17-year cycle forward, it started out with a steadily increasing. It was kind of like Spanish flu was the big spike. Then you pulled way back, and in the mid-30s you had one flu outbreak. Then in the early 50s you had what was called the Liverpool flu outbreak, which hit England and Canada the hardest. But then 17 years after that you had the Hong Kong flu, and then 17 years later in 1985-86 you had the Taiwan flu outbreak, and then 2002 to 2003 you had SARS, which is another respiratory viral outbreak. And that 17-year cycle was also focused on 2019-2020 as the next significant influenza viral outbreak. So this analysis done back in 2014 was talking about how you had this 10-year cycle, this 17-year cycle, and the solar cycle, which, if you go back to even the middle of the previous millennium, in the Dark Ages, one of the significant things was how little solar activity there was in the 1600s and the surrounding decades and even centuries, and that coincided with, one of the worst disease times on the globe. But even on smaller scale, you often see this coinciding with the trough or the nadir of the solar cycle. So you had all these things coming together in 2019, 2020, and so to me it was more the synergy than anything else. I'll look at individual cycles, but it's when you have a lot of these coming together that it really makes me stand up and take notice. And so that's what was detailed back in 2014, and I've revisited that analysis a few times since then. So when we came into early 2020 and were hit with what we were hit with, it just powerfully reinforced all of those cycles.
We'll have more with Eric Hadik when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Eric Hadik. Eric, what kind of cycle activity do you expect in the general stock markets over the next period?
I have been looking for stocks to, I thought we'd see a bottom in late March. And again, there's very consistent cycles I'm watching, but it ultimately comes down to price activity and specific signals that I need to see to validate those cycles. That's something I try to clarify anytime I start talking about different cycles that I watch, because cycles in and of themselves, there is a lot of some subjectivity, some ambiguity, and more. The worst part of it is the leeway when it comes to risk and money management. And when you're trading, you need specifics where that type of stuff is concerned. So I would stress that. But with that said, the last 2 years, it has just been uncanny to me how the stock market has mirrored what we saw 40 years ago in the late 70s and early 80s. And I started describing and monitoring the ongoing swings in the market and how they were paralleling what we had seen in 1978 through 1982. So I was, comparing that to 2018 to 2022. And also a 2-year cycle has been doing the same thing, that the timing of your swings in the market have been very similar on a 2-year basis as well. Well, here again, the synergy of both of those was what prompted me in early February to warn about a pretty significant stock market sell-off expected from mid-February through late March. And I did a series of articles in early February. One was called The Perfect Storm of Sell Signals, and explained why there were all these technical signals reinforcing those cycles. But the bottom line was that as it started to take hold and started to validate these cycles, I was turning my readers' focus to March 23rd as the ideal time for a bottom. And if you looked back 2 years ago and saw what the market did from a timing perspective, it had a sharp sell-off in January, a bit like many of the indexes did here. It rebounded into mid-February and then sold off into March 23rd when the Dow set its lowest close for at least 6-8 months in 2018. But at the same time, if you went back 40 years ago and looked at 1980, the Dow did the same thing. It peaked on February 12th, 13th, and then saw a sharp sell-off into the week of March 23rd to the 27th. And so as we came into this year and into this phase, I was looking at the synergy of those, along with probably a dozen other technical and timing indicators, all aligning within a week or two of each other in my work. And sure enough, the Dow topped exactly on February 12th, 13th, just like it had done 40 years earlier, and started to sell off. And so I kept talking about March 23rd. Well, when does the Dow set its bottom? On March 23rd. Exactly as it did 2 years ago and 40 years ago. And from there, you saw strong rallies, ultimately to new highs in many of the indexes during both of those preceding cycles. But there were also a lot of other indicators that validated that in my work. So we're coming off of that bottoming cycle in late March, and I think we're going to see another significant bottom in late May to early June. I do think that some of the indexes, like the transports, which are in a much weaker structure, could easily set new lows for the year and for this entire correction at that time. But stronger indexes like the Nasdaq 100 and tech stocks are far more likely to just see a moderate, sizable correction, but to a much higher low during that late May to early June cycle. And depending on, as long as certain indicators corroborate this at that time, then you should enter another more bullish phase moving forward from there.
Precious metals, what's your outlook for them?
I continue to really follow the overriding outlook that I've had since late 2018 was for the second phase of a precious metals bull market. And the first phase started in late 2015, went through a chunk of 2016. Then you were in corrective mode for 2 years, basically. And late 2018 ushered in what I thought would be a 2 to 2.5 year bull market. I still think that metals and gold stocks are going to work progressively higher on balance into late 2020, and there's more and more cycles coming into play around May of 2021 when I could see a final peak for this overall bull market. So within that, I think there's certainly times like we're in now where we could see some correction in the metals. There's actually a very intriguing weekly cycle in silver that I've been documenting that I think is something to watch in the next couple of months. But all of that is in that overriding outlook for a bull market, particularly in gold and gold stocks. But I do think I think the time for silver is actually coming up soon, and I'm starting to discuss when and where I think that's going to happen. But for right now, it still is gold-related investments that remain at the forefront of that bull market.
Will we see negative interest rates in North America?
You know, one of the things when I'm talking about even those cycles in the stock market and these cycles in precious metals, my work for the last couple of years has been focused on mid-2020 as the next bottom in interest rates. And really I do my analysis more on the bond market and 10-year notes. So it's the inverse. For them, it's a peak. But they have had a consistent 4-year cycle that has first it timed a series of lows in the late 90s and early 2000s. Then that cycle inverted, which is what I expect from cycles, and started timing peaks. And so the middle of 2012, right around June, in fact, this cycle is kind of June plus or minus a month. 2012 was a major peak in bonds, low in interest rates. Then same thing in middle of 2016, and that 4-year cycle was projecting the next major top in bonds and major low in related interest rates for the middle of 2020. And so it's funny, even as we came into this year, and I had shown how I thought that bonds had put in a low in November, December of 2019, and now they were ready to head back up to new highs leading into mid-2020, I would get a lot of inquiries saying, everything's so strong, how can interest rates be going down? The stock market's here hitting new highs, unemployment's hitting new lows, and yet these cycles kept saying that interest rates should have another sharp drop leading into a major bottom in the middle of the year. Well, it didn't take long to reveal what it was that was going to trigger that next dive in interest rates and spike high in bonds when COVID-19 took hold. The economy came to a screeching halt, and here again the cycles were validated once again, and we're showing things before most people could envision why that cycle was showing that interest rates needed to have another downturn and bonds needed one more surge. So I think that is going to culminate in the middle of this year, and that fits with the cycles that I'm talking about in the stock market, where things should turn more sustainably positive after late May, early June, and metals having the potential to see kind of the culmination, which is often when they have some of their biggest moves, between mid-2020 and second quarter of 2021. All those things would fit with interest rates bottoming out and other things starting to show a rebound or a strengthening on the opposing side.
Eric, your outlook for crude?
Crude is in a similar situation to stock markets, and that's often the case. And I think that right now we've been in recovery mode. I'm looking for, on an intermediate basis, energy markets to work steadily. It may be slowly or in fits and starts, but higher into late May, early June. And I think it's all part of a bottoming process. But it's going to take some time to really get that bottoming phase to evolve, and then start to look forward to when you get more of a sustained uptrend to follow.
Eric, for people unfamiliar with InsideTrackTrading.com, can you tell us a bit about the company?
Well, they've probably gotten a guess from most of this discussion, but cycle analysis is at the core or the foundation of much of what we do. But having traded the markets for several decades now, I really emphasize the practicality and the pragmatic side of any form of analysis. And so I really focused on a lot of specific technical tools and indicators that validate and filter the cycles and how to use them in trading. And so it's a cyclical, technical based analysis, and we have different publications depending on the time horizon that a trader or investor is interested in, from monthly newsletter to weekly updates with interweek alerts. And so that's what we provide. But there's a lot of additional special reports that delve into some of the topics we've talked about today, anything from disease cycles to global shaping events, solar cycles, even things like earthquakes and volcanoes and those type of cycles. But they're not the primary focus. They're just kind of some additional thought-provoking reports that I put out to just reinforce the impact of cycle analysis on our lives and on our world.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and president of InsideTrackTrading.com, Inside spelled INSIIDE. He was speaking to us from the Chicago area. Coming up, Arch Crawford, next on This Week in Money.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Arch Crawford, founder of Crawford Perspectives, online at crawfordperspectives.com. This is his first time on This Week in Money. He's speaking to us from Arizona. Arch, welcome to the show.
Delighted to be here. Thank you.
Arch, can you please tell us first of all about what Crawford Perspectives is all about?
I started following the market when I was 13 and made my first trade when I was 14, and that was in 1955. And when I was 19, I went to work for Merrill Lynch in Raleigh, North Carolina, marking a chalk board. Shortly, they got an electronic board, and I helped them out in the back office for a few months. And I said, this is what I want to do. Send me to New York. They said, don't be ridiculous. So come Labor Day weekend, I said, I quit. I'm going to New York and look for a job. And they said, don't do that. We'll transfer you. So I ended up in the research department where I wanted to be in New York at the tender age of 20. And became the first ever assistant to their technical analyst, Robert Farrell, who's really well known on Wall Street. He retired he retired before the big mess in 2002, I think. So anyway, I was with them for 4 years there, and I went out on my own after that and started my own newsletter in 1977, Crawford Perspectives. It's been 43 years now.
So you have a little bit of a background, and you started kind of like the way I started in radio. I started when I was in high school and 17 years old. You learn on the job, and if you're any good, they keep you around.
Well, it's a time when we develop our real serious interests, and I think that's a good thing to do.
Well, as they always say, if you find something you love doing, you never work a day in your life.
That's right. The two other people that were in this business had their own newsletters, Richard Russell and Joe Granville. They must have actually been born the same year because Granville died at 90, and Richard Russell died the following year at 91. These are big names in the industry. And they both wrote their letters up until the last week of their lives.
So, can you tell us now about Crawford Perspectives itself? What does it do? What kind of people are involved in it? And what's your perspective, I guess?
Okay, well, I got interested in astrology from the front page of the Wall Street Journal the day before my birthday in 1963. I was at Merrill Lynch in New York, and there were 5 people who were talking about using astrology in the markets. And I went and met all of them and asked them if they had a book that they had written, I bought it. If they had a book that they liked, I bought it. And I read these books, and I said, none of this is what I want to know. I want to know what is the average percent change with these planetary events. So I actually got a little hand calculator, mounted it on a printer, and calculated the changes from 1885 to about 1970. So that is the basis of my newsletter. Primarily that and the technical analysis that, of course, I taught myself when I started teaching myself in Raleigh, North Carolina. One of the guys there bought me the book, Technical Analysis of Stock Trends by McGee and Edwards. And so I had been learning along. So when I got there into New York in the research department, I already knew a fairly solid basis from theoretical, and that I had been looking at all the charts at Merrill Lynch for 6 months, drawing all the lines and developing a very solid knowledge about technical analysis.
How does financial astrology complement technical analysis?
Well, some of the people who are analysts in Wall Street are fundamental analysts, and a good many of them have taken notice of technical market analysis, which has to do with the movement of the stock as opposed to the qualities of the company. So I do the technical analysis and add to it with the astronomic work. And I've found certain very critical times that have been extremely important. I mean, the biggest number thing that happened to me was called the harmonic convergence, and I read about that on the front page of the Wall Street Journal. A fellow had written a book about the Mayan calendar date, and he said that an important date for the Mayan calendar was coming up on August the 17th, 1987. And I looked at that date in my computer, and I said, I don't see any big whoop with that. So I started moving the cursor one day at a time, and when I got up to August the 24th, there was the tightest five-body conjunction in at least 800 years that I checked. And they were all visible things, Sun, Moon, Mercury, Venus, and Mars. So the Mayans could have followed him by eyesight. And they were all within 1.25 degrees of the sky, which is, if you hold up two fingers at arm length, that's about 1.25 degrees. That's tight. That is really tight. And they were all in the best possible aspect to Jupiter. And also, secondarily, to Uranus, forming a grand cross. A grand trine. And I said, it can't get any better than this in the planets. And I said, I think this has got to be a very significant top, because it'll be straight up into that. So I wrote in the newsletter, this market will peak on August the 24th, give or take 3 days, after which we will have a horrendous crash as this alignment is breaking up. If you go back and look, August the 24th was the high close of that year, 1987. The market then dropped down to a solar eclipse on the fall equinox, September 21 or 22, I forget. And then the next day was the biggest up day in history in points to that time. It rallied for 2 weeks into a lunar eclipse. And on the lunar eclipse, it had the biggest down day in history in points to that date. And that started the slide into the very well-known crash in 1987, which was October the 19th. And I was just looking at the chart again here. I also have a chart in my talk where there's a threshold activity of the electron flux that's measured by the government. The weekly geosynchronous satellite environment summary showing that the electrons went to above that threshold level on Wednesday before the crash. The Dow dropped 95 points on that day, which was a pretty big move for those days. The next day it was down 57, and on Friday it was down 108. And I was interviewed on the television station that was mostly about the markets in those days. I think it was Ron Insano was there. He's been at CNBC for he was there many years. But he interviewed me that day, and I said, I think we could have 130-point decline followed by a 200-point decline. And that was the most bearish thing that anybody said on television or radio. Then we went past the weekend, the electron flux was still hanging up there, and on Monday, the market went down 508 points, which was the largest percentage drop in all of history to this date here. I mean, to today. It's never gone down more than that in one day, in percent.
You're consistently one of the top market timers in Timers Digest. Can you tell us about what exactly Timers Digest is?
It's Timer Digest. And there was another rating service called Holbert Financial Digest, and the Holbert was following a lot more people, and he was a hot shot, and he sold out his Holbert Digest to the Wall Street Journal, and they quit following me for free. So I stayed with Time of Dead Digest, and the people there were friends for many years. And oddly, the man who bought it years ago, he didn't start it apparently, but he, for these many, many years, he's been doing the Timer Digest rankings for everybody. And he died like a couple of weeks ago. But I got the new copy, and so somebody is still keeping it up, and I hope they keep it going. But they were following about 100 of the top financial newsletters by the rankings in the Dow Jones or the S&P. I forget. Most of them follow the S&P, but some of them follow the Dow Jones. I forget which they do. And they also follow the gold market and the bond market. And we have a credible long-term following in all of those markets. And we happen to be right now tied for number 1 in the bond market, tied for number 4 in the gold market, and just drop out of the top 10 in the stock market on this rally. But we went up pretty high in that on the, I think up to the 5th or 6th place for the last 12-month period.
Are there markets that tend to follow astrology and markets that don't?
Actually, one of the others in Timer Digest, maybe 2 or 3 of us are out of their 100. I think Bill Meridian and some guy that was in Germany, and he's moved over here. I forget what his name is. But they are all known names in the industry.
Can astrology predict a pandemic, or what some people are calling a plandemic?
What astrology does is it judges the quality of human emotion, I believe, and it's maybe largely by the electron flux from the sun kind of thing. And nobody knows exactly why it does what it does, but it can predict all kinds of things. Now, my interest is primarily in the markets, and I think you have a question on here about is it some markets better than others. I found it works most deadly in the gold market because, I don't know, it's gold market is largely an emotional factor. It's been around for as long as humanity has been around, and people have been very emotionally excited by it one way or another. So, anyway, the gold market is, I think, the best responder to the planetary events. But everything responds to. I remember one January, a long time ago, I forget which year, I said, watch out for earthquakes on the 16th and 18th of January. Whatever year that was, the 16th was the huge Kobe quake in Japan, and the 18th was an equally large one in Brazil, but it was out in the middle of nowhere, so it did not make any kind of headlines. But all kinds of things are responsive to this. I think the University of North Carolina did a study on couples having sex, and they said, send us a postcard just with plain something or other on it, and have the date and time, and they spiked big time at the full moons.
As the economy starts to reopen, are we likely to see the U.S. stock markets move higher as well?
Well, the stock market tends to respond to what is expected, and not always when the thing happens. Sometimes it peaks when the thing happens and goes down, unexpected to most people. But the smart people, the traders and the real people who are making a living at this, they say buy on the rumor and sell on the news of good things happening.
Do you follow the Canadian markets?
I have not, but as I say, we're talking about basic human emotion here, and it works in many various and sundry markets. And I think I hate to say this, the Canadian markets do follow the U.S. markets somewhat, but I think the Canadians have the lock on the stuff in the ground, the gold, the silver, and the other things that they mine up there. They have that market kind of under some control.
Would you expect a place like British Columbia, which is one of the biggest copper miners in the world, to maybe see a boom because copper is known to have antiviral properties?
Have what properties?
Antivirus.
Antiviral. How about that?
Yeah. The Egyptians knew about that 5,000 years ago.
Uh-huh.
So.
They were no dopes.
No, they weren't. And you'll notice the Egyptians didn't have negative interest rates either.
Well, that's a new thing. That nobody has ever had negative interest rates before. Ever. Not in any historical where any information is available.
Yeah, like I said, if the ancient Chinese, Romans, and Egyptians didn't have negative interest rates, why would we have them today? Because they had all that knowledge. And I think they always knew a good thing when they saw it, and that wasn't a good thing. What's your opinion on interest rates right now?
My opinion about how it could go negative is that people are afraid of what's happening in the world, and they want their money safe, and that's a fairly cheap way to keep it. It's not. Usually you would expect to get money from your money, and I think it's just a lot of nervousness in the world about how things are going, and of course there should be, because the things that are going on are quite crazy. The markets are out of control, and interest rates are out of control, and spending by nations is out of control. If you could spend yourself out of problems, the most valuable country in the world would be, what was it? I've forgotten. I just read this yesterday. The one where they spent themselves huge numbers of trillion-dollar notes in Africa, I think it was, one of the African countries. And, of course, it went totally bankrupt and utterly out. But if you could spend yourself into prosperity, that would not happen.
Is the U.S. dollar likely to remain the strongest currency on the planet?
I don't see how it possibly can. The thing is that so many of the other major currencies are also in different levels of insanity and trouble. It hadn't let the dollar go down much yet. But if you try to buy something, you will notice that the dollar has been down every decade from the time the Federal Reserve was created, in terms of buying power. And that's still the case. It's down to about, 2 or 3 cents of $1913. And that's, it's still one of the more powerful currencies and still will buy many things, but not as much as it used to.
Well, there's still deepest, darkest parts of Africa where you can show up with U.S. dollars and they'll take them. Try doing that with Canadian money.
Okay.
Gold seems to be stuck in a trading range. What do you see ahead for gold?
On the daily chart, I can see that. On the hourly chart, I can see that sideways pattern, but it's actually triangulating where the highs are a little bit lower and the lows are a little bit higher, and it's coming out to a point at the end. And I think, looking at the weekly chart, that doesn't show up so much, and the weekly chart is extremely strong, and we are extremely powerful long gold.
Silver also seems to be stuck in a trading range. Is the gold-silver ratio a positive indicator for silver?
I said in this last letter, one of the strangest things going on with the metals is that the gold-silver ratio has risen to the highest level in all of recorded history. We are old-fashioned enough to think you should have some and maybe buy some more while it is cheap before it becomes more important in our potentially developing survival mode economy.
We'll have more with Arch Crawford when This Week in Money returns.
Don't miss out. Stay informed. Receive the Howstreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the Howstreet.com weekly recap on our homepage at Howstreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Arch Crawford. Arch, the crude oil markets have been extremely volatile. Is crude likely to continue on a trend higher?
It is right back up to declining 50-day moving average, which means either it's going to turn back down and go and retrace and test the lows, or it's going to break through that declining moving average, and in which case it would be considered a lot stronger for more increase. But right now it's exactly on that point, so I'm back and forth on it, and I tend to believe more that it will come back down rather than going higher, but that's a modest belief at this point.
What do you see ahead for the metals used in lithium-ion batteries?
Well, electronics are certainly the way we have been going for many years, and I don't see anything to change that unless we go into some crazy thing where civilization completely falls apart, which is also possible. But I'm not going to bet on that one. But I would think lithium and batteries in general would continue to increase until they allow free energy machines. Several people have developed a way to get energy right out of the air or off of the Earth's magnetic field, and a couple of them have been murdered, and a lot of them have had their equipment taken away and marked them as phonies. But they have the real stuff.
Wasn't Tesla one of those people?
Of course. Tesla was backed by J.P. Morgan. And when Tesla finally came up and said, hey, I've got this way of sending electricity for free anywhere, J.P. Morgan owned all the copper. And he said, screw you, buddy, and shut him down.
What other commodities are you following right now?
Interest rate. Bonds and interest rate. The interest rate, I said I was number one in the bonds now because I predict the interest rates. I mentioned it in the market, and apparently the people who do that came up last month that I was in the top 5, and right now in the top 1 with a couple of other people. So I'm seeing that the bond, look at the chart right here. The momentum has stopped going up on the bond, and I don't think it's going to keep going up the way it has been. I would certainly lighten up if I were heavily long, and I have been heavily long in the newsletter. So I said the 30-year bond chart before has been a picture of health. There has been some backing and filling action in recent months, but the trend is inescapably higher. There seems to be less momentum as a more recent development, and that speaks for greater caution in adding further positions. Prepare to lighten up if upside continues to lag.
Arch, taking a look at the overall market and your astrological charts, what do you think is in the near, midterm, and long-term futures for us?
Well, I'm looking for a short-term peak here by Tuesday, so it's been blasting off up into what I'm expecting to be a top, and it hasn't topped in the early portion of it, so I'm giving it till the 12th, and I have good reasons for thinking by the 12th, but if it were to go a few more days after that, I would still be negative unless the technicals improve somewhat.
Arch, how can people find out more about Crawford Perspectives?
Well, we have a website online. It's just crawfordperspectives.com.
Arch, thank you so much for being on This Week in Money.
Delighted. Anytime, sir.
My guest has been Arch Crawford, founder of Crawford Perspectives, online at crawfordperspectives.com. He was speaking to us from the great state of Arizona. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Arch Crawford, and Eric Hadik, and thank you for listening. If you have any questions for the show, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howstreet Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on Howstreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Jim, a pleasure.
Larry, what kind of challenges are you finding with the coronavirus outbreak, and how is the company dealing with them?
Well, it's interesting because I think I've mentioned this before on podcasts, but we're busier than we've ever been. And because people are, catching up and recontacting, or fresh contacts are coming in. And, a lot of people are working from home. Our office is fully staffed. Now, we did have some people working from home, but so we're back in, go-ahead mode. And so it's shown us some opportunities that were created by the coronavirus, and that is just how vulnerable these countries are outside of China for dependency on critical metals or rare earths. And so now they're starting to focus their attention on that. And I just want to remind people that we also, got our start developing a technology for working with manganese, low-grade manganese, and being able to produce electrolytic manganese metal and electrolytic manganese dioxide at comparable costs to China. At that time, that was a big thing, but you still need the price, and that's a commodity, and actually the metal price is way down. And but going forward, the U.S. is dependent on all imports for manganese. They can't get it from within the country. The only ones that have probably a solution for that was worked on by the U.S. Bureau of Mines for 60 years, and it's our patented process that brings those deposits to life, because they've got lots of low grade. And so we're getting interest in that direction again. Certainly we can supply some of the critical metals like cobalt and lithium and nickel, manganese from our recycling process. And our recycling process eventually, over a period of time, will replace a lot of the mining that's going on, and could make a country totally independent when it comes to these critical metals. So this is kind of what I want to imprint into people, that we do have advantages now that are becoming more and more, I should say, dominant in what we're doing. We're starting to pay attention to manganese again. We're not going to lose our focus on recycling, but it's a slow process, and hopefully we'll be able to advance that. We have the answers, and through our guy in Washington D.C. on our advisory board, Dan McGroarty, he advises policy and everything in Washington D.C., especially to the DOE and DOD and some of the senators, and so he's getting a lot of interest in our direction, and so that's very helpful to the company. And we have some news on that. We'll have news next week. We've started to do some more things at the lab, and so we'll have news coming out of that. And at least the startup of a certain project that we've been talking about for the last 2 or 3 months. So it's all a go. Then I look at the markets and I see, as if I'm talking to you, the Dow Jones is over 24,000. I always talk about the Dow Jones because the venture exchange is, anything it's 480 or something like that, and it's not reflecting its old robustness at all. So, but golds are really flying, and we do have a good gold project in our company. And, we're looking at ways that we can optimize those assets. So that will be some news coming down the road at one point. And, but going back to talking about the Dow, it's been struggling to get and stay over 24,000. And I think if it breaks out from the 24,000, it could end up at 28,000 in a couple of months, and that's only great for us. It's surprising that the metal prices like copper, which is at I think a low of 205, trading at just under 240 today, and that's a dramatic increase. Certainly tells you that the commodity prices are starting to hold in there and starting to gain back some of their losses. That's always encouraging because at the end of the day we have commodities, and it's certainly the commodities we have are in demand. I don't see I see EV car manufacturing dropping somewhat, although Tesla keeps gaining. And, but that's not going to affect us down the road. There will be lots of battery manufacturing that's being talked about going into various countries. And, Elon's moving swiftly to, cover a lot of those bases with Tesla. And, I have to take my hat off to the guy. I mean, he's dynamic, and, a lot of people love him or hate him, and, but I think that most people love him. He's made a lot of money for a lot of investors. And, he's in the right area at the right time, but, he was almost broke in 2010, and a couple of things happened for him that, pulled him out of that rut, and, he was a $10, $11 stock at that time. And look at it today. It's high 700s or the low 800s, and wow. Wouldn't you like to have bought shares back then? So it shows that when there's opportunity around, you have to be a contrarian investor, and you should be looking at stocks that are down. And we see, we've had in a couple of occasions, we've had patent attorneys look at our patents, and they figure that we've got it covered. And I've been saying that since day one. And, those patents are the company's lifeblood, and people will start to see that pretty quickly. So the whole aspect is the market, but it seems like it wants to go north rather than south. Although it's jigsaw-y, that's what I said in the B recovery, and let's all get back to work before we start starving to death.
People who are new to American Manganese, where can they find out more information about the company?
Well, you can go to our website, AmericanManganeseInc.com. We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in Frankfurt under the symbol 2AM. You can reach the company or myself at LREAUGH@AMYMN.com. And although not many people do it anymore, you can pick up the phone and phone us here at 778-574-4444. And we'll answer any question that you have.
Larry, thank you so much for the update.
You're welcome, Jim.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on May 8th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at Howstreet.com. Company Showcase is a production of Howstreet Media Incorporated.